Well, actually, it's a question I get asked very regularly. Who on earth in their right mind would want to set up an agricultural bank just lending to farmers?
Crumbs, we've got a lot of more buildings to build, Nick. 12th of January, Sunday morning, going through the papers, just clearing my desk, the never-ending emails and desks, just trying to get them sorted out just before I knock into a new week. It's a great opportunity while it's quiet. Poor old Tom just made his way in here, so got a chance to just wrap up the last video I did. So we had this week, we've done a meeting with Oxbury Bank and Nick Holmes, who's our accountant. And the reason I wanted to focus on this was because at the moment, agriculture at the moment is in a really bad place, politically and tax-wise and various other things. And of course, I wanted to try and look at how we could be upbeat and actually look at investment. Now, there's two ways you can look at this. You can actually say that if I invest more on the farm, I actually create myself a bigger tax problem because the asset grows in wealth. Or you could look at it and say, by increasing the value of the farm, but not only that, by increasing its income, I have myself in a better position to be able to pay the tax off. So I wanted to go with a more positive angle and say, okay, what are the opportunities? What can we do in terms of where can we borrow money? Who is interested in lending money to agriculture? We saw Nicholas Hunt from HSBC beginning of the week, and now we're had Oxbury in and looking at what's available. And they are a dedicated bank to agriculture and agriculture only. So that's why the piece you're about to see is about that. And so hopefully you can look at that and see actually, where are we going to go as an industry? Because we can't just stay in a position where we are eroding our best assets, which are the people within it. And as Tom likes to remind me, we are 19,995 subscribers, so we're 5 away from 20. I know I said I wanted to get to 25, but go big or go home. So soon hopefully it'll be at 20. So hit the subscribe button and let's start this new year off rocking and rolling.
10th of January, sitting in the boardroom, and it's a frosty day. It's been -5 today. We're out on the land getting rid of some estate jobs that we've got to do, cutting trees, etc. Got some fantastic guests here. Tom seems to be having a problem with the cameras because he's getting me to do all kinds of clapping and things. But we'll get past that. And I've just done a faux pas, so we've had to redo this because I've actually introduced Kat wrongly, didn't I?
You did.
I did, yeah. So I've been told off. But so we've got Nick Holmes here from Chavery, who is our accountant. We've been working together now, we think, 6 or 7 years. Nick's a really important part of this business in the sense that he's not only a trustee, but he's also creating 10-year plans for us at any one given time, created a lot of growth, and has also dealt with family succession and managed to keep all of the family happy and engaged with each other, which actually there's a lot to be said in that. We've got Nick Evans here from Oxbury Bank. And we got Kat Howell here as well. And what we wanted to try and talk about today is there's a lot of concern about the UK agriculture. There's a lot of concern within families, but we don't want it to be doom and gloom. We want to look at how we're going to move forward. What are we going to do over the next 10 years? Because we're committed. We are spending money by building buildings. We've got planning permission to build houses, etc. We've got 10-year plans, which I think are quite ambitious, and we're looking forward to doing them. And we don't want to be just spending time thinking that farming's a problem. We've got to get past that. And that's important for us to have the right people sitting around the table in discussing how we're going to do that. And Nick's going to sort of start leading the charge on where we're going.
Yeah. So I mean, the reason that I thought we should have this meeting, James, is because really, banks are the lifeblood of the sector. The reality is that the sector needs debt. There aren't that many businesses in the industry that don't have debt, and inevitably, the sector is having to evolve, and it will have to evolve yet further to make allowance for what has happened. In the budget. We can all be very doom and gloom about what this all means, but the reality is life goes on. Mm-hmm. We've got to keep moving forward. As a business, you've got to keep moving forward. And over my career in the industry, which effectively goes back to when I was first born a very long time ago, is banking has changed.
Yes.
And the most progressive change in my career has been when I first went to see Nick in London and it was a hotel somewhere just off the Strand, wasn't it?
2019.
You were having a first board meeting, and it got introduced to Nick. And Nick says, "We're setting up a new agricultural bank." So they're thinking, what realistically is this going to look like? And I'm sure throughout this we'll talk about how banking has changed, but it has changed monumentally. But the thing about Oxbury, and just so that everybody's aware of this, I'm not a shareholder, I don't get commission, is that they do things in a way like they used to be done. And the first lend that I was ever involved with Oxbury is when Kat looked after a client of mine in Lincolnshire very well. Probably turned it round in about 8 weeks, I think. And actually, that turnaround period hasn't really lengthened since then. We all know how painful it can be with a lot of lenders at the moment. So really, I thought it was interesting to introduce these guys, and really, one of the first things I was going to say to Nick is, give us the history as why it all started, where you are, where you've got to, what the plans are. Then I'm sure from there we'll have a lot of fun talking about where next.
Well, actually, it's a question I get asked very regularly. Who on earth in their right mind would want to set up an agricultural bank just lending to farmers? But that's what we are. We are a bank, licensed and fully regulated by the Bank of England, and our market is food and farming. That's it. And so why? So that my background is agriculture all the way through. I looked after the Bank of Scotland's agricultural business in the 1990s before setting up an agricultural IT business, sold that. And then in 2018, I thought, well, there's a massive opportunity in agriculture to become a lender to best UK food and farming businesses. And part of the reason for that, in the IT business, I travelled all around the world and saw lots and lots of farming businesses. But coming back to the UK has some of the best farming businesses in the world. Yes. And if they're properly supported, and if they're properly helped and loved by the bank, then we can help grow and develop those businesses to make UK agriculture more productive, more efficient, greater percentage of the UK's GDP. We can reduce food imports. We can do food exports. So I thought the opportunity was absolutely there. The timing was right. And there are 3, I think, global things that are happening in food and farming, particularly farming, which sealed that decision. Number 1, and you're a good example of this, big farms are getting bigger globally. And those big farms are getting bigger to take advantages of economies of scale, spreading their fixed costs over more acres, automation, less labour, more machinery, economies of scale. Number 1.
And which is important because we are a global competing.
We're competing globally, correct.
Because the price of wheat is not dictated because what's happening in Norfolk is international.
Correct. Absolutely.
And they are by default our competitors. And if we don't grow our businesses to stay competitive, we will just be squeezed out.
Well, so just come back to the UK thing. So in the UK, of course, I don't think we didn't have a specialist agricultural bank. So all the high street banks do agriculture and do farming, but they do it as part of a broader business portfolio. Yeah. All we do is agriculture. And the French have had an agricultural bank, Crédit Agricole, for years. Okay. The Dutch have had an agricultural bank, Rabobank, for years. The Chinese have had an agricultural bank, which is the Ag Bank of China, for years. So it's not a new concept, this having an agricultural bank. It's new to the UK.
I think the thing is, when I first started in the industry in the 90s, is we obviously had, the AMC, but that evolved, and then we had certain working capital facilities. I'm trying to remember what they were that you could go and get, but they they've gone,
and they were part of Lloyd's. Was that right?
AMC is still part of Lloyd's. Yeah. I mean, that's the second point, really. If you look around the world, again, the high street banks, the traditional banks, aren't providing a personalised service in the way that they used to, and they're not providing a specialised service in the way they used to. And I think that's wrong. So if you're dealing with a big business like yours, for example, you need... Agriculture's different. It is different. And therefore, I think you need someone who speaks farmer, understands what you're talking about, understands that it's not a 1 year cash flow we're looking at. Why do we do a 10-year cash flow or a 10-year plan? Because it's a generational business, not a 1 year business or a quarterly business as some.
And we can't control the weather.
Can't control the weather.
Control our output.
No.
Because if the prices go down and the weather dictates a poor yield.
So you need a bank that understands that agriculture is different and works like that. And the high street have been moving away, putting their historically excellent relationship managers into call centres, where you ring up and you speak to Daphne or Chardonnay, and she's just spoken to a hairdresser, and then she's spoken to a builder, and then she's nothing wrong with these guys, by the way. And then she's spoken to a farmer. How suppose you understand a farmer? She's just been speaking about hairspray.
Yeah.
So we've gone the opposite direction to all the other banks. There's now 50 people, relationship managers, out on farms talking to farmers about growing and expanding their businesses.
And will they've come from an agricultural base in the past?
Well, most of them are farmer sons and daughters. So they've been speaking farmer since they were...
Okay. And you think that's actually quite important for,
I think it's super important because they can relate. When our relationship managers go onto farms, they can relate straight away to the person they're talking to. It's not some sort of... them come from an engineering background or something. They come from a farming background. Most of them have been through agricultural college, and many of them have been in other agricultural banks. So we've just hopefully our new training facility we call AMC, because we've just taken some of the best people out of AMC and brought them into the business. Decades of experience of doing agricultural banking, and we've managed to.
So this is 2019.
Yeah, 2000.
I know it's only 2025.
Yeah.
So it's quite a quick growth. I mean, obviously you wanted to get a bank, and I know I've watched Banker Dave about trying to start up a bank.
Yeah.
That's probably unrelated.
Yeah, completely unrelated. Yeah. He's not a bank, by the way. I just want to clear that up. Banker Dave is not a bank. No, he still can't get a banking license.
Okay.
Yeah. Though his movie career is more than compensated, he's probably worth way more than he would have done anything. Like. Anyhow,
so you were hoping that this podcast might take off, actually, Nick?
Yeah, that's right. Yeah,
be a stand-in.
Yeah. If I had £1 for every time someone said, "Oh, you're the banker, Nick," I could retire. But anyhow, it took us about 2 years to get a banking license. We applied for it in February 19.
From the Bank of England.
Yeah, from the Bank of England.
Okay.
So you have to go through
a rigorous.
They don't give banking licenses to any old muppet.
Yeah.
Notwithstanding. So it took us 2 years. So we started lending in March 2021.
Yeah.
And since March 2021, by doing things, Nick said, we're going back to basics. We ring people back. You say, well, that's not a very high hurdle, is it?
Yeah.
You ring.
Surprisingly, it is.
Surprisingly, it is. We ring people. I was thinking about putting here, Oxbury Bank. We ring people back.
Yeah.
But basic things like quick decisions, quick execution, competitive rates, and brilliant people.
Yeah.
That's it. And by doing that, we're now 5% of all agricultural lending in the UK. From over 1 billion.
Years.
Well, really, March 21, so just over 3, really.
Goodness.
Or just under 4 now.
Yeah.
So over 1 billion, 5% market share, and today 1 in 10 new farm loans in the UK has been done by Oxbury.
As a growth of any business on any level, that is actually quite extraordinary.
Yeah, so we're one of the fastest growing banks in the UK. In fact, we're one of the fastest growing businesses in the UK right now. And again, it's not down to me really. It's down to the relationship management and the whole team back at the bank.
Of course.
But
Picking the right people.
And the right customers.
Yes.
Because there's no bad debt. No bad debt.
My goodness.
Yeah. 6,000 customers, no bad debt.
And those 6,000 are all related to the food and farming sector.
Yeah. And I'm proud to say, I mean, and quite a number of them are Nick's customers from Chavery's. And Nick's introduced them. We've gone along and talked to them in conjunction with Chavery's and sat down and worked out what it is they actually want to do and what they need, and come up with some facilities.
The timing is actually really well placed from my point of view as a farmer. Because when you look at the overdraft requirement now that a farmer would have today from what it would be 10 years ago or 5 years ago, I mean, the growing cost alone have probably doubled now. You see great reports about ag inflation, etc. Our requirement to access funds to pay the fertilizer bill or pay the chemical bill or just the growing cost or renting the land,
But it's also about the thing is, James. It's also about the volatility. If you just think what we've seen in the last 5 years of the need to have somewhat, I always talk about a team. It's like when we were talking last night. Is you had Nick Blake there and everything, and you chat as a team.
Yes.
And if you don't have a bank sat around the table with you, that's in the gang, is how do you navigate that volatility? And that's the thing that I've found, particularly with Oxbury, is I can go and see a business that we look after, and they'll say, look, we're thinking of doing this, or we need this, or we need that. And generally speaking, the path of least resistance is, well, I'll give Kat a ring, or I'll give Nick a ring, or whoever, and say, look, what about this? What do you think? Do you think it's doable? Is it worth sending you some numbers? Yeah, we'll go and see them. And that just doesn't really exist. I mean, it exists to a very small degree in some of the banks now. Some of the other banks.
But getting deals done, time can kill a deal, can't it?
Completely.
And I years ago I had a situation which you were involved in. It took over 8 months.
Yeah.
That was previous to the bank I'm with now, who I must say are amazing. But the previous one was a high street bank. But my great grandfather started with in 1896. So the family stayed with this bank, and they always joked that they were more likely to get divorced to their wives than they would to leave the bank. I came along and for whatever reason, I decided that we needed to enter into a new relationship, which we did, and we moved banks, and that's actually no small role. And we did pretty much one of the best things I've ever done in my career. I went away from a high street bank, and I went to a private bank, and that has been a very good decision for this business and allowed this business to grow. The access to capital in a timely manner of putting through, having the likes of Nick, and Nick Blake, who can put a compelling argument forward, do the cash flows, etc., which gives you guys the confidence to be able to lend, then allows us to build the project and get on with it. If the time is too long, whoever it is you wanted to do the project for, they've moved on because they found an alternative somewhere else, and you've lost the opportunity of growth. And that's actually costly to a business.
And it is. And the problem is nowadays, so many things in life is, and I can't remember whether it's the Far Show, whatever it is, where its computer says no.
Yeah.
Is there are so many things nowadays where it is, do you think we could do this? Do you think we could lend on this? No is the general answer. For great businesses, bloody good businesses that we know can, got plenty of security and can ultimately pay it back. And it's just, well, no, we can't do it, or it's too difficult, or you'll have to get, someone else to speak to you about it. And when I go back to the beginning of this discussion about what do clients and businesses of mine need to navigate, this, silly, silly, change in legislation on IHT is, well, they need a bank that actually is going to partner with them, and actually going to help them achieve things. And I think, we sat around this table, we had a discussion before, is I think we're all pretty positive about the industry, aren't we?
Strangely, I've obviously got friends that don't feel as chipper as me. I've always felt pretty chipper about farming, to be fair. And there's always, every year, without fail, there has been some disaster going on in farming. There's for every reason why I shouldn't continue to farm.
Yeah.
But I don't want to spend the rest of my life not chipper about what I'm doing, because actually I really enjoy what I'm doing. I want to continue doing it.
But it also affects the next generation, doesn't it?
Well, because I'm sitting them down the table, telling them 3 meals a day, farming's rubbish. And then, surprise, surprise, you wonder why they don't want to go into it. I don't want that scenario. Equally, if the children don't want to, and at the moment they're actually showing a lot of interest, and I think that what we're trying to do in this business is we're trying to create quite a bit of diversification, different aspects of what we're doing, whether it's renting building houses, renting barns. But actually, if they're not, say, mad keen, for example, on growing crops, but they like business, there's a route for them to come into it.
But people have got short memories as well, haven't they? And by the way, we are super positive about the future. Super positive.
Even now, I appreciate this.
Especially now.
Yeah.
Especially now.
Because 2019 is a different time, isn't it?
It is.
Because you obviously started up, and then I'm assuming COVID came along.
COVID was...
Brexit came along.
Yeah, that was
so that you've had some interesting times. Now we've got wars going on elsewhere, which obviously had knock-on effects coming back in. And now we've got taxation change, which perhaps my generation hasn't ever witnessed it before. I mean, was it 1983 or something that they brought in this 100% relief?
Yeah.
It's not as long ago as you think. I mean, it is our lifetime.
Yeah.
What did they do out of interest before that?
People survived. People kept going, and people organised their affairs as well they could. And you look at some of the legacy structures, and an awful lot of the good farming businesses that exist nowadays were built between World War One, World War Two, and post World War Two. So people survived and they got on with things.
So I mean, my grandparents in that sense aren't around anymore, but they never said to me when I was growing up, "Oh, well, it's brilliant now, but it was rubbish then." They actually never had those conversations. In fact, they'd probably more likely tell me it was better then than it is now. But
if you just go back though, it just seemed 20 years. So we did our first loan in March 2021, and here we are in January 2025. But in the midst of that, I think many farmers, year ending March 2023, would have had so many of our customers said it was a once in a generation profitability.
Yeah.
So just 2 years ago, it was, didn't hear too much moaning then.
That very much depends upon, of course, when
you bought your fertilizer.
little fish. Some of us seem to be late developers in that.
That's but still, we see some fantastic, even now, because we're seeing 2023 accounts, we see some fantastic 2023 accounts.
Yeah.
Situation, of course, has changed.
Yeah.
And it's kind of back to a more normal time at the moment.
Yeah, that there is a lot of positivity, and I always go back to that thing that what Maslow's hierarchy of needs. What do human beings need?
Yeah.
Food, shelter, all the rest of it. Well, actually, they're all the things that actually land produces.
Yeah. I mean, there are some nasty things coming up in Labour's thinking about compulsory purchase powers and things like that, about the ability to not pay hope value and things. We know that actually could be quite devastating for a lot of businesses.
It will never work. You can dream these things up, but they won't work.
I know there's a lot of people, Nick, who currently, when I talk to them, they often say that they're waiting for the Labour to come out and the Tories, for example, to come back in 4 or 5 years' time. But the reality is, actually, what have we done from today back 5 years? We've done an awful lot. I don't want to sit still for 5 years waiting for something I can't guarantee.
Well, it's just such a gamble, isn't it? That's the problem.
It's such a waste of life.
Life, gamble, and, let's just toss a coin.
But it was a bit like, and, we can all go back to the days of COVID because it's relatively fresh in our minds. Is at the beginning of that, I mean, for me with my business, it was, God, and my wife was literally a week away from having to have a cesarean for our third daughter, and it was like the world is going to end.
Oh yeah,
and then
you've got to go to hospital
in a month. But then a month after that, it was, well, actually, the world is still going on. And throughout COVID, you saw people getting more and more positive. That we had a housing boom.
Yes.
And I actually think with the industry, when you boil it all down, you look globally, you look at what's going on around the world. Where do you want to own land? Where do you want to be? Yes, we're not this perfect nation, but actually we're a pretty good place to be. It's a pretty extraordinary industry. But again, it goes back to this point: is we have to have, banking is the lifeblood. Money is the lifeblood of what we need to do as an industry to expand, to diversify, to do everything else. And that's why, from my perspective, I was so much a fan of these guys, because they're helping to develop the businesses that I look after, and we've got to keep moving forward on that basis. I think
When I look back at my career, I had this wonderful bank manager called Gary Salas, and he was with us for about 17 years. And bar 6 months when I first started, he was my bank manager all the way through that time. And he made a tremendous difference to me in what I was doing. And one of the things that he said to me was that when I first started off, I was obviously contracting and contract farming. So it wasn't an asset-based business apart from the machinery. I was purely, doing the work and getting paid monthly, etc., and then building the business that way and taking on more land. And he said to me one time, you've got to get some assets somehow into your business other than the machinery, houses or something like that. So I went off and I bought a house, effectively, which then actually somebody who came to work for me then went in, and I so carried on. Had I not done that, I wouldn't have built an asset base up, which then in itself allowed me to release capital in those assets, which allowed me to then borrow more money to then perhaps get the next house and so on. And actually, that's what got me on the path. And without him and his guidance, and then with the ability to borrow money through the bank, I wouldn't be sat here today with the ability to grow a business as I have, because you cannot you can't grow a big business without capital. Right. Even with contract farming, where you've got positive cash flow coming in, where you're effectively paid monthly for doing the work, there would become a limitation, because without enough asset, you can't get the HP to buy the machinery and so on. And actually, I feel that if something did happen to me, and I sort of popped off, I've left my children, for example, I think in a good place, and you're obviously a trustee, so you've got a view on this, but it actually puts them in a good place, which is far better than when I started. And of course, is that not just the role of a farmer and a father? To try and put yourself in a better place than where you started.
You do everything, everything for your children. Even, they're my children already, don't listen to me. And the youngest one's 4, is you do everything for you do everything for your children. That's natural. Again, all these things, Maslow's hierarchy of needs, and that's how we're built. That's what we're meant to do.
The borrowing money isn't quite as straightforward as we make it.
Well, now, but it's not. But you see, that's the interesting thing with this government. And I'll be interested to ask Nick and Kat about this. And there's all this stuff in the paper over the last couple of weeks with bond yields and everything else, and just to kind of explain that. But the one thing you get from it, and I read a headline, 6 o'clock this morning, I was looking at, online at the Times or whatever, and it said that the Chancellor had reached out to all the government departments about how you get growth and how you get the confidence.
Yes.
If you're confident enough to say, do you know what, I'll do this.
Yeah.
And I'll pick up the phone to Kat and I need £1 million to do this. Well, if you don't have that confidence, then people won't do anything. And they have just, they've taken a big syringe and taken all the confidence
the global
out of the economy, and that's what they need to inject.
The economy wider.
Yeah. I think is everything. Look at the share price of the house builders.
Absolutely, yeah.
They're on the floor.
In some of the comments I've had, because obviously I speak to non-farmers, for example, and a lot of that's been opened up by the likes of Jeremy Clarkson, who people are now really interested in agriculture and farming, who perhaps wouldn't have ever discussed it with me. Whereas in farming, we see this 20% tax and we go, oh my God, this is a disaster. I've got people coming up to me saying, you only got to pay 20% tax. And of course, for them, they're thinking the other alternative is 40%. And they're going, hold on a second, so I could buy farmland. So interestingly, what it's done is for a lot of non-farming people, they're perhaps now starting to look at farming, I don't know if you're hearing this, as a route of investment. Which to a lot of farmers, when you see over 50% of farms bought last year was non-farmers, you could argue that's a disadvantage, unless, of course, you get the opportunity to farm for them or rent the farm.
Somewhat ironic, isn't it, that Nick was just talking there about the Chancellor asking government ministers about ideas for growth, when actually, if she came out and talked to you or other agribusinesses or businesses in general about ideas for growth, that'd be a much more fruitful patch for her to be walking around and talking to government ministers.
People who are employing people, who are making a difference to those families.
Correct.
Putting money back into society.
Yeah.
You know, building infrastructure. You know, I think of all the people we employ, I mean, we've got 51 people in total, but then, of course, there's all these subsidiary industries. There's the tractor manufacturers, there's the tractor dealerships, there's the tyre companies.
Yeah.
You know, we've got the local dealers, we've got the builders, we've got the slate companies, we've got the roof trust, we've got the juicers of this world. You know, and Anglia Farmers, I can't remember how many people they've got employed in them, but I'm sure it's over 100. But all these people connect with the farm that aren't necessarily agricultural, but are all feeding in. And yet
but the thing is as well, I know we're going to talk about bonds, is that people like spending. This is a stupid, and it's a very dangerous thing to say. My wife sees this. She loves spending money. But people like spending money. They like seeing progress, don't they?
People like investing. I do think people do like making investments. And actually, just so in our customer base, we come back to some positivity. In our customer base, we're not seeing people wanting to say, I'm giving up, that's it, I've had enough. We're just not seeing that. And we are seeing more people saying, actually, this is a time of opportunity. And it's an opportunity to grow, it's an opportunity to become more efficient, it's an opportunity to diversify into something else, to expand, become more productive and efficient. We're seeing more of that across arable, across livestock. It's so...
Diversification is an extraordinary subject, really. I mean, I love diversification. It's enabled me to carry on doing what I'm doing, but I always think it's somewhat sad for the farmer. A minister would go to somewhere like the Oxford Farming Conference, stand up on the podium and say, right, farmers, I need you to diversify to bring other money in so that you can continue producing food. I think that's almost a great shame for the food production in itself isn't considered to stand on its own feet.
Yeah, but then they don't give you. Sorry, then I'm going to ask Nick about bond yields, but then they don't give you any tax incentive to diversify. In actual fact, it's the opposite. It's
more negative.
That you know, they make it, and it's slightly different, but it's a bit like with buy-to-let property and mortgage interest relief. Is, well, if you want to stifle, you know, that side of it, then put barriers in the way, and that's what they're good at. They're good at putting barriers in the way rather than making it easier. Because why, if you diversify, or why, if you do stuff to do with carbon or whatever it is, don't you get a lower tax rate? You don't.
And it's also, with any diversification, it has to be something you know and understand. And you have to be passionate about it, because every farmer is passionate about what they're doing. They understand it, they want to do it. Diversification has to be the same. Otherwise, there is a risk of the
investing or borrowing money to invest in something that actually could turn out to be a failure and then become a liability. Yeah, that's a key point. I mean, when I look at my diversification, actually, it's all very much related around what I'm already doing. So my lorries, for example, they're part of diversification. My grain stores are part of diversification, and building houses, etc. But they're all for the facility, for the primary. And the primary for me is the farm.
But it's also looking at that. It's also a natural progression and a natural growth of how you've gone. And the farm has got bigger.
Yeah.
It's not looking at something completely as a satellite.
No, I agree. Also, I've got a sister, and she followed me at Riddle College. And after she was coming out of college, she went to do sort of a tourism course. So we, as a family, we sat down at how we're going to find place for everybody in amongst the farm, etc. And at that time, we actually were exploring putting in farm shop. Because there was a bit of a phase, wasn't there, of building farm shops, etc.
Yeah.
But actually, it turned out that Louise actually didn't want to do that. She wanted to do something else. But I think you're quite right. It's about investing in something that is long term, and this is the important part, is going to work. Or you've got to invest off farm. Because I think what would be a tragedy would to be investing on the farm, but then is a failure, and then you have to sell that right in the middle of the farmyard. You know, if we bought something 5 miles away and for whatever reason it didn't work, it's an easy thing to sell and not actually interrupt your overall generational asset.
But it's understanding all of the risks. And then when you've done that with a professionals around you that are giving you that help and support and challenge where needed, is looking and saying, right, okay, is it still the right thing to do?
Yeah, I mean, I've surrounded myself with the likes of Nick and good banking people and other advisors, because it isn't that they turn up and actually come up with the idea and tell me what it is I've got to do. It's actually we sit in a room, not dissimilar to this, and we're firing ideas all over the place. And actually, you put 10 balls up in the air and one lands. And we go, do you know, actually, I think I could do that.
Yeah.
I got that. I'd like that. And I think about some of the couple of things I have done in my career, which have actually financially worked, but I didn't enjoy and stopped doing. So, for example, I set up a ground care business once. And we were going out utilising stuff on the farm, like mowing grass and hedges and things like that. And, you know, it was utilising what we already had, but it turned out that if you weren't careful, it absorbed 80% of my time for a profit of 25 grand.
You learn as, you know, I mean, that is business, isn't it? You learn, you know, the way I run my business today is different to the way it was 25 years ago. Well, you know, you learn and you evolve. But the one thing that you need along that journey is you need, you know, a bank that's going to be flexible and understand what you actually do. And this is, you know, this is the thing that we're lacking at the moment. And I still, having discussed it and said about tax relief, is, you know, why do we give tax relief for like the film industry and for R&D, for biotech and all this stuff, when you look at what the government do with the NHS, they want people to be more healthy, well, healthy food and all the rest of it. So why doesn't agriculture get low rates of tax? You know, it doesn't work. But Nick, the one thing I want to know is just talk to me about these headlines that have been in the paper over the last, you know, week or two, and what's happening with the currency, the bond yields. You know, why is it happening, and what does it mean? You know, for
and can you tell us in a bit basic terms?
Basic terms.
Because Nick might understand this more than me, and I'd like to just understand the basics.
Yeah. So, number one, it is super important to you and everybody else that might be watching, because what's happening is the cost which the government has to pay for the money that it's borrowing is going up, and it's going up because people have assessed the risk of buying government debt and saying, I want a better return for that risk than I was getting previously. I previously quite liked it. Now I don't really like it, so you've got to give me a bit more money. And so today the yields on government debt are about 5.3, 5.4, 5.5%. They're going up. And
since there's been a change in government.
Yes, since there's been a change in government, and that's been accelerating in the last 6 weeks, 2 months. And by the way, it's accelerating not just in the UK, it's accelerating in the US, and it's accelerating across Western Europe. So it's not just a UK problem, but the UK problem is the UK has experienced that problem more than elsewhere.
And politically, that's where changes come start.
Yes, so what's the impact of the government having to pay more for its borrowing? Number one is that it has, if it's paying more on borrowing, so I read just recently, Adam, that of the money that was just raised in that recent tax on businesses, £1 in every 4 is now going to pay the additional interest that the government's having to pay on its debt.
Oh my goodness.
Yeah. So anyway,
we ran this business like that.
Yeah.
Well, it's a bit like, I'm guessing, Nick, it's like doing your budget, and, you know, I know government do a form of budget, is their ability to, you know, that cash flow that you had, that free cash flow you had at the end of the year is pretty much disappeared. There's around £1 billion or something less.
Yes, billions.
And we all know their policies aren't going to work, so it's going to get worse.
They're going to tax more and try and take more from us as opposed to fixing the whole rating.
Well, they've said they aren't going to tax more, haven't they? So they aren't going to borrow more, so they're going to have to cut spending. So,
but there's a lot of international aid disappearing out of the UK to go to other places.
I think it's a proportion of our total budget. It's relatively modest, but part of what's the knock-on impacts of the government having to pay more money for its debt is, let's assume they're paying 5.3%. Yeah. That underpins, that's called a gilt yield. That gilt yield underpins the money that the government's borrowing comes from the likes of pension funds and international private equity, international hedge funds, and so on. So that underpins a rate for UK borrowing. So that means that the capacity for us as banks to provide lower interest rates, it means our borrowing costs are also going up. So we'll have to pay more to our savers. than we would otherwise. So that means our ability to be able to lend to, in our case, farmers, the rates will have to go up proportionately because we're having to pay more for our deposits.
So does that mean, actually, Nick, crudely, it's a better time to be a saver?
I mean, savings rates, the savings market is odd at the moment, but it's been a good time to be a saver relatively in the last 18 months, 2 years. So we're just coming out of some bond deals at the moment where we were paying 6% to our savers.
Oh, right.
Just coming out of that now. And the money that's being replaced by money at 4.5 to 5% is what we're paying to savers today. But as the rates...
% is often a better return that a lot of family businesses would achieve.
Well, there might be different...
Sold up,
yes.
Yeah.
Or a return that might...
In isolation, obviously, and again, this is part of the misunderstanding of returns in the industry is clearly asset values have gone up, haven't they?
Yeah.
So, whereas if you cash in the bank,
You mean it
stagnates.
farm when I first came here was 3,000 acre.
Yeah.
And now we're sitting there.
Yeah, the house, the buildings.
Okay.
You've also been able to invest on it.
Yes.
You had growth.
Well, we created a lot of that asset wealth
Yeah.
because we've actually, we haven't sat still. If we sat still, we would probably be worth about 15% of where we are now.
But without stressing that debt or an expanding.
Yeah. Well, it has lots of stress. It does. Sometimes I wake up early.
Some sweating of it.
Yeah.
It's moved forward, isn't it?
Yeah.
Whereas if you left it in a bank account, the reality is that then doesn't grow.
Well, I suspect that my mother would say now that there's only a point where some of her savings are making proper money, whereas before, in my working life up to today, probably it didn't make 1% or there was times it probably would have jumped to make 0.25%.
Yeah. Yeah.
I mean, if we just talk about asset, though, land values, that's another important thing I think we need to just consider. So we've seen a growth from it would have been less than 3,000 when I first came here, I think, but to 15. Am I now, if I'm borrowing based on assets and I'm borrowing money to grow the business, etc., and the asset value goes down, which the majority of the asset might be land, am I putting myself at risk? Because are we now seeing BPS gone and we're not seeing the support from the government and we're seeing taxation come? And actually, you could argue an overall attack into the farming industry from what we've previously seen. Is that then going to force land values down? And so that actually my asset ratio to debt becomes effective, which then forces me into a spiral that means I then have to start selling.
I mean, when I look at it, I don't think in general it will. Land is very much location dependent and type dependent, and I'm not a land agent, so I'm here. Otherwise, I'd be out shooting, wouldn't I?
Stop it now. Stop it.
Is actually, I think land values will remain strong and will keep going because, a bit like you said earlier, people have, the pennies drop. I can get 20% IHT relief effectively by
that's the old adage. When one thing's a negative for one person, suddenly it's a positive for another.
But where do you put money? Because when you have a balanced portfolio, you'll put some with Oxbury, but then you'll have some in land and some as something else. So I can't see land values doing anything but continuing to track it.
It's a wanted asset.
It is a wanted asset, but it's a wanted asset not just for people in the UK. There's
international investors. And there were no restrictions, as I understand it, for international investors to come and buy properties and things in London.
So the non-farming buyers as well. So again, a land agent recently said there's 17,000 acres in Norfolk, which is planning permission for solar. A very big church-based fund has recently bought another 4,000 acres in not far from here. At a price which was negotiated back in the summer before the IHT and the capital. We did a deal for some land in Suffolk where the price agreed was in the summer. We executed on the deal, I think, in November. Price didn't change.
No. So, but New Zealand, when they dropped all the payments,
the price didn't change either.
Especially, but the
Up. Yeah.
And it continues to go up. And actually, where they wouldn't have the support in Australia, the land has gone up. I've got friends who the land is 3 times the value that it was 10 years ago.
Yeah. But it is location, isn't it? Because, again, I know around here there's some land which you could put a cheeky bid in and probably get for less than 10 grand an acre.
Yeah.
And a little bit closer to Cambridge, you'd be paying 15, 20 grand an acre. So it is all about location, who the neighbours are.
But it's not going to go to 5.
You can never say never, but it's highly, highly unlikely. We don't think it's going to go to 5.
I don't see it.
We believe it's where it is. And
well, as a bank, if you're basically lending into a single sector, and the main asset for your securing your loans again
is land.
You've got to be really comfortable. For actually that is a secure asset.
Well, we lend to a maximum 75% loan to value. So 75.
Well, we've got a lot of more buildings to go there.
But it's also enterprise dependent as well, and depending on what the planning permission rules are.
Yes, of course.
Length where it's English.
Geographically, yeah.
But you've also got farmers who look at different counties across the UK and going, actually, it's better for my business from a risk point of view, whether to buy a farm over in the east when I'm currently trading in the west, because I can then
I was annoyed my
the seasonality.
Father moved to Norfolk and he was living near Great Yarmouth, and there were houses for sale there for £60,000, but there were houses for sale here for nearly £500,000. So the wheat's the same price here as the wheat is the same price there. And actually, it'd be better to have picked the farm up if you wanted to be in pure agriculture and have been farming over there, because your infrastructure costs were so much cheaper.
But like the old days, where I live in Kent, is you used to get 2 acres on Romney Marsh for 1 acre. That was a government scheme, effectively.
Because every time we wanted to take more land on, and that's obviously my main role and what I aspire to do, every time we want to take a new member of staff on, we've got to find £500,000 for another house. So actually, when we go to increase the area, we've got to actually take that into account. But it's not all negative, because of course that becomes an asset in itself. It's not just a cost.
But you see, that's why things like planning, if they do want to help the industry, then why is it so difficult, or historically why has it become so difficult to build houses for employees? Because
especially if you're a non-livestock based business, it's tremendously difficult. They go down the justification route.
So I mean, I think there's a lot of quite simple things the government could do that wouldn't actually cost them anything. To actually get behind the industry and get it moving. And let's hope that there's some common sense at some point.
I think your aspiration, though, James, to grow the farm is more likely now than it perhaps was before, because I can see, farms becoming available for, whether it's contract farming or for short-term tenancy or even for long-term tenancy, where people want to retain ownership of the land but don't necessarily want to farm it.
And not only that, there has to always be, I believe in this business, an element of purchase. Because again, I'll go back to my original model. If I'm not careful, I'm not growing the assets. So there has to be a balance somewhere.
It's the ratio. You have to have a ratio, I think, of freehold to leasehold, ultimately, because the reality is that, just having discussed it, his values will always go up.
When I bought that land down the road, and it was principally £7,000 an acre in about 2011, I remember Father saying to me, "That's the most expensive land you'll ever buy." It's a ridiculous amount of money. And he said, land used to be, I don't know, £2,000 an acre or something. He said, I remember turning to him, I said, well, why didn't you buy more then? But when I look now at that land is effectively sitting there, minimum 12,000 an acre. And I've effectively, because we've had low interest rates, I've been maintaining the rent that I would have paid out to a landlord direct to the bank for the value of that land in terms of interest. So I've actually paid a rent as I would have done if I was renting it, but the asset has now grown, so I'm now going to benefit from the asset growth.
Yeah.
Yeah. Well, one of the things, well, there's two things. I mean,
Yeah.
Where are we on things like carbon? Because I know that there was this, green lanes and that side of it. Is it important for us as a business to be doing our carbon footprint or our natural capital footprint? As I'm involved with the guys at Trinity. Absolutely fantastic guys. Is where are we with that at the moment? How important is it from a banking perspective and a lending perspective to be able to show you're on a journey? Your carbon footprint's getting lower. You've got this natural capital.
It's hugely important, and it's hugely important for various factors. One, depending on what contracts you want in the future, the supply chain potentially will want to know what you're doing, because they ultimately going to look at that. So if you want to be able to sell whatever it is that you produce, you're going to need to have an understanding of what that looks like.
You don't think it's a fad?
I don't think it's a fad, but I also think...
And who does it matter to?
Every government in the world has virtually set a target for its carbon emissions.
So it's including the UK government driven. It's not the family home. It's not the household. It's not the housewife. It's not coming from the bottom up. It's coming from the government down.
Top down, and then underneath that. So again, recently there was a conference in London. Recently there were 50 sovereign wealth funds, the biggest hedge funds and private equity funds in the world, and some mega family offices sat in a room, 50 of them, at Liverpool Street, between them managing trillions and trillions of dollars of assets under management. And the focus of the whole thing was carbon reduction.
Does that mean it's going to be a bit like mineral rights? Do you think farmers will start selling their rights? Is it going to be considered a bit like that?
Well, I think it is potentially. Well, I don't think it is in the future a revenue stream for farmers.
But when? Because that's important to me.
Yeah.
Because we always thought, when the BPS was coming down, take us about 5, 6, 7 years ago, but actually the carbon market was going to develop quite quickly, and it's going to be a direct replacement.
Yeah.
Currently, I've done carbon. It's in an unregulated industry, and I haven't received a penny for it.
No.
And I have the credits, and I'm waiting to receive an income.
So I think what it comes down to, number one, is you will know what your carbon emissions are. So your fertilizer, your crop protection, all your diesel, the operations, and so on. And then, so you'll know your output. What you may not know today is how much carbon is locked up in your soil.
Yes.
And that is fundamental for us.
So should we? So our 10-year plan. Our 10-year plan.
Yeah.
When these guys are going to get their checkbooks out, is our 10-year plan. Within that, we should have a natural capital plan.
You have to have a natural capital plan. And by the way, so our average loan, long-term loan, we do long-term loans, obviously, mortgages. Our average is 21 years. So we'll go out to 25, but the average is 21. Absolutely for sure, the regulation and society will be different in 21 years than it is today. And climate and sustainability and transition and all those other buzzwords which we have today, the regulation will be more intense then than it is now. And if we're lending for 21 years, we still want people to be paying us back in 21 years. So it's important that people get on that journey now rather than waiting. So a 10-year plan around, let's call it natural capital, but certainly around carbon, biodiversity, probably water.
And is that going to influence the interest rates yet or in the future?
Well, we're already asking farmers about that, and we will be incentivizing and rewarding people who are on the right trajectory.
But it's also terminology, isn't it? Because you can go and sit around a kitchen table in the farm and speak to the farmer, and you'll talk about carbon and what they're doing, and they'll say, well, they're not doing anything. And then you'll talk about the land and how they've changed their practices, and they're actually doing it. But they're doing it because there's a cost saving to them today.
It's an old age problem in farming that we do a tremendous amount of good and do a lot of things, but we're very poor in telling everybody.
Yeah.
And it's been going on for generations now, all the way through my farm.
It's like, but it's a bit like R&D and R&D Tax Relief, stuff like that. And you sit down, they go, no, we don't do any of that. And then you say, well, about black grass, what have you been doing to try and control your black grass?
It gets excited.
And then suddenly you find that they've done 50 different things. That's all innovation.
It's just changing the terminology and not using the buzzwords, but actually understanding the individual farm and what it means.
So the key point here is that effectively, as we're building our 10-year plan now, we need to be putting that in as a line, more for a better word, and start researching and perhaps go into things and start having a real understanding.
But it's also understanding where you are today, because you need to understand your starting point.
Yes.
There's no point.
Well, measuring.
Yeah.
But that's one of the problems that I'm a bit frustrated with, the unregulated part of it and the fact that there isn't a standardised measurement. You could almost stand up and just come up with anything, and there'd be very few people who'd be challenged.
But that's why, and I am completely biased towards Trinity, is without doubt, that is in my opinion, the best bit of software out there. It does it properly. The problem is there's a lot of things where, a bit like, when your kids start going on some app and they do that in 5 minutes, that's the way it's been done. And clearly that's not going to give you a proper answer. And I know there's lots of debate about what the proper answer is, but it is, to do it properly will take investment. But, it was a slightly leading question when I asked you about carbon. In my opinion, I thought that investment is going to be worthwhile because ultimately there will be reward for it. And it just helps you understand the business and create efficiencies and everything else, because suddenly you say, hang on a minute, well, why is that number?
So what's the timeline, Nick? Do we need to start thinking about doing this within this business? Is this 12 months? It's 24 months.
It's already happening now, isn't it? So there are, Unilever on their regenerative oilseed rape.
Mustard.
Yeah, mustard. And regenerative mustard. Yeah. Warburton's in the regenerative wheat, and so on and so on. There are multiple processor schemes. Obviously, virtually all the dairies, liquid milk dairies anyway, are working on schemes to improve their sustainability or carbon footprint of the milk, and so on. So virtually every sector is being, again, government down to processors, retailers and processors and so on. The pressure is coming down.
Well, what we desperately need is farmers. We need is turning to cash.
Turning to cash. Well, I think that's where. So
we don't want suddenly someone says, "Oh, I'm going to come and plant trees all over your farm." That's not what I don't think hardcore farmers want to do.
Nope.
Well, no. And the other thing about that is biodiversity is actually, should you have that variety of tree, and that's what, that's where it goes in opposition, I think, to good environmental practice, because you're getting stuff forced upon you which is just not natural.
We went down the buy net gain route, where effectively we were going to take 100 acres out and we were going to put it in a buy net gain scheme for 33 years, and it was going to deliver credits with the way we had to manage it out of my standard model of farming. I couldn't grow crops anymore. For the want of a better word, going to be in grass, and we had to manage that in a way that meant that then the developers of houses in a nearby town, a Campbell, could buy these credits to offset their big
biodiversity loss.
There's been lots of schemes throughout the last 10 years, isn't there, of opportunities to perhaps not farm, in a sense to keep the land ownership. And a historical model would have been to potentially rent the farm out to somebody else or do contract farming, for example. Suddenly now we've got competition. We've got buy net gain. We're taking land out of production for 33 years. I mean, that's a long time. So that's a generational decision. And then we've got, I can't remember what the other thing is now. It's gone.
SFI.
Oh, that was it?
No,
sorry.
Yeah.
And then we've got SFI.
Or MF, as I call it.
But SFI is obviously 3 years, and now they've gone on the government's pause. Some of the grants, some of the payments, etc. I was thinking about this over Christmas. Had a bit of time off over Christmas. It gave me a bit of clarity and a bit of thinking time.
Cool.
And there's been times over the last 2 years where there's been an opportunity for effectively me to stop farming completely, put the whole lot into these schemes, and then just sit back. And the reality is, you can't trust them.
No, but
Can't build a 10-year plan. But can't build a 5-year plan.
But that's why I call SFI MFI. I'll never forget as a young boy wanting my MFI furniture. And you used to have these amazing little drawers you pulled out, and it was all magical. But the reality is, after 12 months, it fell to pieces. Yeah. And that's what will happen. And the whole thing, biodiversity net gain, a bit like you said, you'd give £1 for how many people said, Nick's Bank and stuff is for me, if I had £1 for every business we advise that rung me up and said, I've got some BNG ability.
Yeah.
I don't think we've seen a penny.
Mine fell through. I got a phone call to say, and they've gone somewhere else.
And it just doesn't.
Slightly controversially. Yeah.
That may be the best thing that our questions.
Yes, well, that's interesting, because that's where I was going about my Christmas thoughts. So I've got a clear direction. I think doing a 10-year plan, or 15 or 20 or 25, is so important for me as a person, my family in the business, and not only that, the people who work in the business, because I want to share this plan with them, because I think they need to know, why am I doing this? Where am I going? All of these things coming off, they're actually distractions. When you think about it, they are always trying to tell you not to farm or not to do something or use the land for other things. But actually, the best thing I've ever done in my 25 years of farming is straight line, keep going, pushing on.
And I mean, we are going off on tangents there, but it's interesting actually in terms of, we started with talking about banking, but. And again, I don't know how true it is, but apparently more of that younger generation now want certainty in a life full of uncertainty. In this throwaway world that we live in, is actually, you're right, James, is those long-term plans. If you can get your team to buy into it, just people, they want to be settled. And it's a good way of getting people to commit.
A lot of people would probably share stuff with their staff like I do, because they would say that was private. But actually, I think that they're all working together, all under the same umbrella. I think it's important that they know where I'm trying to go, and important I want to grow the business and take more land on, the rationale behind it. Because if the point of taking more land on it makes everybody within the business life a bit easier, a bit better, then it's a positive thing. If it's only to exploit them, on for a better word, and make their life more difficult, then it isn't a better thing.
Well, it's that thing. I mean, I was watching a video the other day of a business, and he said, that my team might not be family by blood, but they're family by ethos.
Yeah.
And if you can get, and again, what I try and do with my guys, I always describe us as this dysfunctional family, but they want to know where you're going, what you want to do. I'm sure you got. I mean, how many people have you got there?
220. But likewise, like you, we share every month. We have an everyone call, and we share how the business is doing, the things that are going right and the things that are going wrong, and the areas we need to focus and improve on every month. And communication
and honesty.
Yeah.
Isn't it? And how we have grown.
Yeah.
The space.
Are you still allowed to have a Christmas party?
Yeah, we have a Christmas party. Yeah, got another. Yeah.
But we also have significant moments.
Well,
and we have events on that.
So, just coming back to your long-term piece, though, and you're absolutely right, a 10-year plan. So one of the things that's problems that's always been in farming is farming is a generational business, and you plan for the long term, and yet you're selling product on a season-by-season basis, typically, and in many cases in the horticultural sector, it's not even a season. You're doing a deal as the crop comes off the field.
Yes,
hopeless. And I think some of the things that are changing now, and coming back to, these are global changes, by the way, they aren't just UK changes, are that the retailers and the processors are putting in place multi-year contracts with growers, and on the livestock sector. So, and from a UK side, and with the German supermarkets in particular, I think are leading the way.
Are they afraid that people will get out of farming and they'll lose supply?
So whereas historically it's all been about price, hasn't it? Yes. I mean, we talked before about
to give away more to encourage people?
Correct.
Will there be RPIs and things in the contract?
Premiums plus ratchets for RPI, ratchets for late fee costs, and treating people fairly.
I mean, my career has been basically, there has been end users which have been pretty brutal.
Yeah. So we're seeing now, and Nick, you'll know them as well, major horticultural businesses, major livestock businesses, major veg businesses getting long-term, I'd say long-term, out to 15 to 20 years in some cases, but in the veg sector, 5 to 7 years on key items of veg where the retailers say, hang on a minute, security of supply is as important or more important than the price.
Now, is that because government has pushed down on, say, for example, the supermarket?
I don't think it's government.
I need you to solve and make sure we don't.
No, it's empty. It's empty.
Empty shelves.
It's empty shelves, and it's been the gradual erosion of the industry.
I mean, there are pictures, obviously, on Twitter every day of empty shelves, and I've been to supermarkets and seen depleted shelves, and there's been more of that now than I would have ever seen 5 years ago. And there's a real risk now with this current 20% tax. People feel very upset about it, don't they?
But look at the world we live in. Importing stuff has become more difficult. Our retailers
And the port.
but our retailers are competing with other retailers in other countries. So there becomes at what price do you buy at? Can you actually get goods? And and actually, these retailers, they're great businesses. They've got some really smart people in them.
Yeah.
And, they're looking at where things are and quite rightly putting these things in place. So, it is, that is very good. So actually industry.
So
10-year plan, you're actually quite impressed with that and think that actually all businesses need to be talking about 10-year plans.
Absolutely, yeah. Well, so we love the principle of a 10-year plan. One, because it shows things, some logical things like succession, but actually what the business is trying to do, it allows us, working with you, to actually plan your capital structures, your working capital and your infrastructure capital going forward.
Even in 10 years, I'm going to be 58, so one would hope that there still was somebody was worth lending money to.
Young man, yeah.
Relative, isn't it?
Right,
I surround myself with older people, I feel better about myself. So, is that a good place to end, Nick?
Yeah, the only other thing I was just going to ask about was covenants, actually, because again, I know that your approach. I know that you have to do it in you have regulators and things, but it's been, from my perspective, it's just been so refreshing about being able to talk about, because in the old days, you gave a bank some land, and they gave you some money. These days, we have these, not like one of my clients who said that they were going to have a convent imposed on their loan, which slightly confused me. Is a covenant? Is that what does it mean and how does it evolve? And probably in 2 minutes. But as I say, the thing about what I found with these guys is the client can talk about it. We can talk about it, and we can discuss why it's necessary. It's not just right, you've got to make sure that your interest rate cover, so that, the amount of profit you're making versus the interest you're paying has got, you've at least got to be able to do that, because we know in farming it's volatile and that might not happen in 1 year.
Yep.
But it's making it relevant to the farming enterprises. So there's no point having a covenant that doesn't make sense.
You nearly said convent then, didn't you?
And nearly did. That doesn't make sense, and it's not going to be. And the professionals or the farmer don't understand what it means and how it affects. So you have to start at basics, understand the business. Is it practical? Does it make sense? And is everybody in agreement?
Yeah. We like one covenant, which is a loan to value. And if we can get away with one, that's perfect.
Something simple.
Simple. Yeah. Everyone knows where they are.
And your 75% is interesting.
Yeah.
It reflects. That's the first time I've heard of any of the numbers of that high.
Yeah.
Typically 50%. People might stretch to 60 with residential, but
and interestingly, a business that I'm much on the board of, we've actually had our loan to value reduced from 70 to 65.
Okay.
And
is that a confidence? Is that a confidence by that lender in the industry?
It's, again, this is a slightly philosophical point, but, as a bank, you are there to take an element of risk.
Yep.
That's what you do. And there does come a point where they're not taking any risk at all,
yes,
or realistically, they're not taking any risk. And you think, does that relationship still work?
Yeah, that's a good point.
It has to work for everybody.
It's a team. It's a partnership, isn't it?
Absolutely.
Well, personally, for me, sitting in a room like this together and firing ideas around, thinking about the future, thinking long term, how we're going to get there, what are we got to do to get there, what is available to us, where are the lending abilities and restrictions, because there's always restrictions as well, isn't there? We must be mindful of that. And actually, what we want to do, as you rightly said, is it the right investment? Because it isn't in the never-ending money.
It's got to be.
Are we going to put our money out? We've talked about this, haven't we? Sometimes £1 can turn into £4, and £1 can turn into £1.20. We've got to put it in the right place.
Or 80p.
Oh,
yeah.
Sorry. Yes, I always think of it going positively. Yes, we must have some negativity. You're quite right. So yes, and down to 80p. It's a really valid point, and we mustn't keep doing what we always think we should be doing, because it might not be the right way of going about it.
Yeah, but that's why it's having trusted people around you that can challenge in the right way to get the right outcome.
Well, surrounding myself with yes people would be tremendously satisfying for myself. But very
Yeah, no comment.
So just to wrap up the video, thank you for everybody who subscribed. Keep subscribing. Will keep inspiring us to carry on doing what we're doing. A couple of questions which have come through. Spray shed insulated? No, we're not insulating the spray shed. It's such a vast area, but we are going to look at how we're going to insulate the small amount left, even though we're working on a policy to have no quantity of chemical left this time of year. Hoodies, yes, I've given Tom the go-ahead that he can get some hoodies on the shop. So guys, keep going on the shop ordering things, and hopefully we'll do another batch of tractors of some sort at some point. I hope everybody who got them over Christmas is really delighted. We had some pictures sent through, so obviously we made some people's Christmases, so we're pleased that that's happened. 10-year plan, we're focusing here on a 10-year plan. Very difficult with the current government we've got to have any kind of plan outside of 3 months of the way they sort of carry on, stopping SFI, do this, do that, stop doing that. We're still going to do a 10-year plan, work on that, and I think that's really key for everybody. 10 years is quite a long time. Do a 15 or 20 if you want to, depending on your age and how you want to roll it out. But we're focusing on that. That's something that now that myself and my advisors and our team are going to do. I think it's important as well that everyone who works under me and with me also sees the direction I want to go in and why, and see how it's going to make their life better, etc. So that's part of the focus I'm going to put in this January. So thanks ever so much, everybody. Nice frosty day today, pretty damn cold. Good for the grain stores. Starts lowering the temperatures of the grain, gets rid of any problems like bugs. So where there's a negative, there's a positive. All the best. Take care. Bye.